And now to get to know more about this particular issue and the impact from Silicon Valley Bank collapse, we now have Bank Permata Chief Economist Josua Pardede with us. But Joshua, thank you so much for joining us.
Thank you for having me as well. Thank
Now,
you.
this has been the talk of the town since the weekend. Everybody is cautious. First of all, could you explain to us in simple terms what actually happened to the Silicon Valley Bank and why is a lot of people so worried about this?
Yeah, first of all, there is a high concentration, risk concentration in terms of their fundings that is dominated by venture capital in tech companies. While on the lending side, because the banking sectors or the banks itself, usually they lend money to the real sectors. But unfortunately, because of the big amount of funding, they need to invest to U.S. Treasuries. And during after, as we know that the Federal Reserve or the U.S. Central Bank has raised policy rates significantly since 2022. So it means that there will be some negative impact to their portfolio, to their investment, because they bought a U.S. Treasury in big amount, particularly in the longer tenor of bonds. So because of there is a withdrawing from their depositors, big amount depositors withdrawing, so they have to realize their losses. It means that there is a liquidity risk and an insolvency risk that happened to SVB and also Signature Bank. So basically, this is because of the insolvency condition and illiquid condition that happened to SVB. So that's why regulators of US closed the SVB and also Signature Bank.
So this is very interesting because I feel like this is like a domino effect, like from one hot potato to the next. And how would you now assess the Silicon Valley Bank failure itself? I mean, it has called itself, the financial partner of the innovation economy. You know that over 2,500 venture capital firms are banked there, especially those VCs that are invested in startup industry. That's why the startup industry that has been so growing recently is mostly highlighted when the Silicon Valley Bank collapsed. Now, what is your take on this?
Yeah, I think there is saying that you don't put your eggs in one basket. It means that in terms of the funding concentration, it is mainly driven by PC companies, and then for their retail depositors, the composition is very limited because we noted that retail depositors seems to be sticky, so they would still maintain their saving in the banks. But in fact, SVB composition in terms of funding is largely dominated by PC companies. So that's why whenever there is a withdrawing from PC companies, it means that the funding is very short. And then looking at also from the lending portfolio, I think this is also a good lesson learned for the other banks, not to put their lendings or investment into big portion of U.S. Treasury itself. As a bank, we need to diversify risk to other portfolio or to other investments in order to mitigate or to minimize the potential loss if there is something happen, and it already happened to SVB because they do not diversify their portfolio in terms of lending and in terms of funding. So I think this is a big problem that SVB face now, and then everybody currently blaming about the Federal Reserve rate hikes. But I think, personally speaking, I don't think that the Fed is the one that need to be blamed, because this is basically because of the mismanagement of the bank that do not diversify their portfolio in terms of funding and in terms of lending. And when it happened, when there's a shock from the Federal Reserve rate hikes, it gives a bad negative impact to their portfolio in terms of balance sheet and then also off balance sheets.
So as mentioned before, this is because of liquidity, and liquidity, of course, is caused because of the mismanagement and the lack of a diversifying. Now, is the Fed's decision to keep raising its benchmark one of the cause of this bank's failure? Now, you've mentioned a little bit about this, but how far has it, though, added into the hot potato? Because we have to look at the climate right now, right? Everybody, since the pandemic, the VCs are taking out, the deposits in billions, and then with everything overstretched, how far, what should have been done in order to, to mitigate or, to mitigate such risks in short amount of time?
Yeah, I think on the one hand, I think the Fed seems to be correct in order to anchor the inflationary pressure, as we know that inflation in U.S. seems to be still currently is relatively high, beyond 6%. So the Federal Reserve is aimed to 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 anchor to tame the inflationary pressure in order to support the economic growth. Because with the inflationary pressure, I think this is not good for sure for the consumption, because the purchasing power will be going down, and then for investment also, this is not very attractive to the investors. So I think again, this is basically because of the mismanagement, and I think there is some lesson learned for the U.S. Financial Service Authority in order to mitigate the microprudential of the SVB. As we know, as I mentioned again, because of the portfolio from the funding and from the lending is concentrated to one segment, and then because of this, because of something happen on the Federal Reserve rate hikes. So yeah, in the short, I think this will have negative impact, yeah, because of they have to finance a big amount of deposits, and then but on the other hand, their lending or their investment, actually the value of the investment is going down. So I think it has to be going forward. I think it has to be fully watched by the regulator in order to mitigate other cases than SVB.
Well, certainly interesting. Let's look at the stock market. Well, we know that the stock market easily reacts to sentiments, and especially the shocks over the weekend. Now, the stock market in US and Asia has declined due to the Silicon Valley Bank sentiment. What about the stock market in Indonesia? The market closed today in the red, down by 2.1%. How do you see this affecting Indonesia, and is it going to be a short term or just a sentiment, or is there even long-term implications?
Yeah, I think there are mixed sentiment today to our capital market, because from the bond market perspective, actually the bond price increased since the bond yield down by 11 basis point, and then in 2 days, actually the bond yield already decreased by 25 basis point. Although from the stock market perspective, yes, this today actually GCI dropped by more than 2% of more or 145 points this today, or in 2 days actually the stocks market decreased by 1.8% or 125 points. Because I think on the one hand, because of the SVB case, I think there is an expectation to the Fed decision this month that the Fed will likely tone down their hawkishness from the probability of 50 basis point hikes this month to becoming 25 basis point hike, because of yeah, again, there is a reason from the market consensus mentioned that, because of the Fed rate hikes significantly, it will have negative impact to the SVB. So I think there will be some shocks or negative impact to the stocks market, but there will be some positive impact to the bond market, because when Federal Reserve decided to hold, or at least to lower the pace of interest rate hikes, I think this will be a positive sentiment to the bond market. But again, for the stocks market, I think there will be some negative sentiments currently to the tech companies or tech stocks, and also financial market stocks, because yeah, I think this because investor still still concerned about the negative spillover to their stocks and then to the capital market in emerging countries. So I think this will be some kind of short-term negative sentiments to the stocks market.
Now, one thing that we also want to hear is, will the Silicon Valley Bank's payment failure directly affect Indonesia as a whole, or any kind of industry here in Indonesia? Because I feel like venture capitals are only emerging here in Indonesia to fund, the startups and all different new industries here in Indonesia. What is your thought about this?
I think one thing, I think in terms of Indonesia banks, I think the closing of SVB is not expected to have direct impact on the Indonesian banking, which has no business relationship, facility line, or investment in SVB securities product. In addition to that, I think unlike SVB and banking in the US in general, banks in Indonesia do not provide credit and investment to technology startups or crypto companies. And from the funding of the startup perspective, I think we agree that Indonesia digital economy is still growing, growing fast going forward because of there is an initiative from the central government to transform digital economy to support economic growth going forward. But I think this it should be short term, yeah. Whenever the global interest rate hikes, this also and then coupled with the case from the SPB, I think for the funding to the startups, there will be some wait and see strategy from the investor perspective. But I think going forward, taking into account to the medium to longer term of potential of digital economy in Indonesia, I think for the funding to the startups in Indonesia still very lucrative, yeah, because looking at the demand side of the e-commerce, for example, and then the other digital economic aspect, I think Indonesia still has a bonus demographic that supports the demand to the digital economy. So I think we are still optimistic that this issue or for the digital economy or the funding to the Indonesia startups will be still attractive going forward.
If anything, this should probably be a lesson to all the banks in Indonesia, an extra one. Thank you so much, Mas Joshua Pardede, Chief Economist of Bank Permata,
Thanks for having me.
for enlightening us in regards to this issue. Thank you so much.